Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created my channel to help as many people as possible become independent and profitable traders. So if that's something that you've been looking to do, welcome to my channel. Now, it honestly doesn't matter if you are a new or returning subscriber. Everyone is welcome to learn because I do make videos for beginners. Now, I do have my own strategy that I like to use, but on my channel, I just share different tips and tricks that have helped me along my journey. So if you go through like my playlist, you'll see some indicators that I used to use, but I don't use anymore. But that doesn't mean that they won't work for you. This channel is strictly education based. So if you're curious, I do encourage you to explore the playlist that I have. And if you have any questions, just go ahead and feel free to ask me them in the comment section. Or you can contact me outside of YouTube. My information for Threads, Instagram, and TradingView are all below. So in today's quick video, we're going to be talking about trading without indicators and using price action to help you find your entry points. I think this is something that every trader should understand. There's nothing wrong with using indicators. I still have my indicators that I feel comfortable with. But even if you don't want to use indicators or you're still new to trading, you can still find some pretty good entries just by understanding price action and market structure. So when it comes to trading, one thing you have to understand is that the market is never just doing one thing. It's always going to be ranging. Now, ranging just means that the market is moving in a pattern, something like this. You can think about it like M's or W's. And what you'll see is that it's constantly buying and selling. Now, the market could be trending overall in one direction, which means that if it's trending down, like we see here for all of these weeks, we can see that there's more red candles than green candles, letting us know that the sellers had control of the market for some time. Or you may see something like this, where there's more green candles than red candles, letting us know that buyers were able to push the price higher and higher for some time. Now, if the market is not going down or if it's not going up, the market is ranging or going sideways. Now, as a trader, sometimes we can get stuck in a consolidation phase, and that's not something that we want to do. We want to make sure that we are trading with the trend. We want to find great entries and we want to make profit. So how can you identify this if you're not using any indicators? Because I know as a new trader, you can have information overload, watching a lot of different videos on YouTube or trying to learn from a lot of different people that are telling you different things, and it can become confusing. So I really just want to cancel that noise and give you guys a way to look at the market that's clean and also easy to understand. Now, there are some tools that you're going to want to use, and this is really just for your own good. And these tools are free. They're not indicators. They just help you to identify certain things in the market. Basically, take notes on your chart. So the first thing that you want to do once you decide what you're going to be trading and you're actually on a chart that you want to look at, it's very important that you highlight the areas of support and resistance, because these are not only going to be your entry points, but they're also going to be where you set your take profit to make money and where you set your stop losses so that you don't lose any money. Now, the way that I like to identify these areas are first with horizontal lines. And a horizontal line is exactly what it sounds like. It's just a line that's going to go across your chart. And the reason why I like it is because it does go all the way back in the past, and you'll be able to see multiple places in the market touch this area. Now, when it comes to support and resistance, resistance is typically found at the top of a buying trend, and you'll know that the market is starting to resist once you see that price is coming off of an uptrend, which we can see here. But then for some reason, price just stops and it doesn't go any higher than that. This is resistance because price is resisting going any higher. And when this happens, price will usually turn around and sell from that buying trend. Now, one way that you can spot resistance, which will be found at the top of a trend, is by the wicks. Now, when you're trading, these things on your chart are called candlesticks, and they do have two parts. They have the body, which is the part that's full and shaded in, but then it also has the wicks. The wicks let us know if they're at the top, the highest place that price may have gotten, even though it didn't necessarily close there. Wicks at the top usually means that price is having a hard time getting higher. The buyers are running out of steam, and the market is most likely to go in the seller's direction. Now, there's another tool you can use, which is pretty simple. It's just a circle, and you'll find this under your brushes. And you can actually highlight these areas of resistance so that they're easier for you to see. Again, the tools are just there for you to take notes on your chart. Because then when we zoom out, we can clearly see how these were areas of resistance, and that once the market touched this area or got close to it, price tend to push down. So if we were going to enter this market for a sell, we would pretty much know that, all right, the market resisted here before, the market resisted here before. And because we see a wick right here, the market is currently resisting as well. Now, again, we haven't used any indicators. We're just looking at the shape of the market and what the candlesticks are telling us. Now, the opposite of resistance is going to be support, and support can typically be found at the bottom of a downtrend. Now, if we look to the left of our chart, we can see that price pushed up to this point, and then we can see price actually sold down to an area of support. Then we see price bought, right? And then price actually bought up to the same area of resistance. Now, what makes something a strong area of resistance is if you see that the market has touched this area multiple times and it's had the same reaction, that's usually where you're going to want to set your sights for a sell as well. And if it's a selling trade, the market is pushing down, you will want your TP to be at these previous levels of support. Now, you can identify a level of support the same way that you can identify a level of resistance. Look at where you see wicks have gathered at the bottom. So we can actually put a horizontal line there, or we can move this horizontal line up because we can see that last time price got to this area, it actually did buy, right? And price actually came down to this area multiple times before it decided to buy, making this a strong area of support. Now, if we were to enter this sell as is, what you would want to do is set your take profit at the previous area of support, because 9 times out of 10, that is going to be an area that it revisits. Now, if we were looking for a buy, we would just be doing the opposite. We would want to identify where we see wicks at the bottom. And I say the more wicks, the better, because it's letting you know that price tested that area multiple times. So the more wicks, the better. Wicks at the bottom is usually a sign of a strong buying trend, and wicks at the top is usually a sign that the selling trend is going to continue. Now, what you'll notice is that even if I go back to the past, and I'm just going to turn my area of resistance red, so we can know that this is a previous place we sold, and I'm going to turn my area of support blue, knowing that this is a previous place that we bought. And I'm just going to go back to the past of what we haven't seen on the chart. And you can see how the market was still having a similar reaction, which further confirms that this actually was a strong area of support. And we can also even see at the top where our line, even in the past, was a strong area of resistance. Now, all we did was use a couple of lines and circles to help us identify target areas or what we should be looking for. And if we were to add indicators, we would see that they probably would be aligning for what we're looking at. One of my favorite indicators to use is the stochastic. And this is just to show you how if you start with price action, you can use your indicators to confirm what you just discovered. Now, for me, when the stochastic is facing up, usually it's a reflection that the market is going up as well. Just like when the stochastic is facing down, it's usually letting me know that the market is doing the same thing. So if I take a quick look at my stochastic, it's confirming what we've already noted, and that's that the market is in a strong resistance area, and it does have the potential to sell back down to previous support. So when it comes to trading, it's really all about identifying those key levels of support and resistance. I can even add another line here, right? And I'm just going to turn this line black. We're going to make this a neutral line. And I'm just going to scroll back to the past so that you guys can see how the market usually respects previous areas of support and resistance. So let's just go ahead and pay attention to the new black lines that we added on our chart. And we can see how even in the past, our areas of support were respected, right? We can see how our areas of resistance were respected. We can see how our areas of support were respected. We can see how our black lines were respected as an area of resistance and support. So I highly encourage you guys to make sure you just take a little extra time to take some notes on your chart. It really doesn't help, and you could potentially find some really great entry points. Now, what I will do is just put the chart in replay mode just so that we can see this in real time. So let's just say we came into the market at this time, and we can see that wicks were starting to form at the bottom of the chart, right? We see 2 wicks, we see 3 actually, and the market was having a hard time getting any lower after coming off of this selling trend. Now, what we could do again is take our horizontal line, put it where we see that area of support, and then take another horizontal line and put it where we see previous areas of resistance. And I'm just going to go ahead and change the color of these lines because remember, these are going to be our target areas. So let's just go ahead and see what happens. So we can see that the market continued to trend within this range. The market looks like it's approaching our TP1, which is a previous area of resistance, and TP1 was hit. Now we see that the market is using our previous area of resistance as support. And this is a tip too. If you are going to use this method to take notes and you ever see that your candles are falling between 2 horizontal lines, use your top line as resistance and your bottom line as support. So as we can see, it looks like the market is slowly approaching that second resistance zone, but this is a super easy method that anyone can use to help you find better entry points into the market. And the best part about it is we haven't even used any indicators, right? So trading doesn't have to be hard. It doesn't have to be complicated. It doesn't have to stress you out. You can actually take baby steps and get really awesome results. So I really hope that this video was helpful. If you guys have any questions about anything that was mentioned in this video, feel free to leave me a comment. Feel free to contact me on Instagram or Threads or TradingView, and I'll get back to you as soon as I can. If you guys are interested in any of my other videos, make sure you explore my channel. I do have playlists on indicators, candlesticks, and strategies that are specifically for beginners, but that's really all I have for you guys today. Until next time, rich friends.